Welcome. My name is Sasha Moore, and we're here today at the Finance 15 webinar, which will focus on the very topical and growth area of SMSF lending. So in this session, we'll be talking with Matthew Porch at Aquamore, who's going to give us his insights about this very specific area. Welcome, Matt.
Hi, Sasha. How are you?
I'm good. So specifically, what we're going to cover is why SMSF lending has seen a sudden resurgence, why SMSF investing is increasingly preferred by a broader demographic, the correlation between the strong property market and SMSF lending, the nuances of SMSF finance, and Aquamore's position on servicing and liquidity. We also encourage you to feed in any questions you have to the panel via the chat function, and time permitting, we'll address these at the end of the session because, Matt, I know we've only got 15 minutes and this is a very, very multi-dimensional topic. So let's get cracking. So let's start with the exodus into SMSF finance. So Matt, we've noticed that many lenders are starting to expand into SMSF finance. Why do you think that is, and what are some contributors behind this sudden resurgence?
Yeah, look, there's been a resurgence in SMSF inquiries in the private lending space and the second-tier non-bank space. I think a lot of that is driven by the major lenders pulling out of this space. I think the major lenders see the SIS compliance rules as too much of a headache at the moment. There's obviously a lot of change in those rules as well, which has pushed a lot of borrowers into the private lending and second tier space. There's also been a resurgence in borrowers looking to manage their own superannuation based on a volatile and volatile is probably the best word, stock market. There seems to be a diminishing return on people's superannuation, which has led them to try and take more control over that.
Yeah, indeed. And I think I concur, but I think also on the flip side, and I know we were just talking offline earlier, there is SMSF is such a growth area. So the actual number of borrowers now looking for funding is quite exponential compared to previous years. So I think you're right, that classic constriction of credit, but also mirrored by market demand. And again, that resurgence, particularly in the private and non-bank space. So in terms of other contributing factors, what else do you think there might be that's really driving this interest?
Yeah, look, there's an uncertain economic landscape, both domestically and overseas as well. A lot of SMSF, well, not SMSF, a lot of superannuation funds are invested in the S&P 200. They're invested in blue chip stocks. Some of them are domestic, some of them are overseas. The uncertain landscape, as I said earlier, has led to a diminishing of certain returns. Cash isn't worth what it used to be. Obviously, inflation is still high. Cost of living crisis is high. Rental prices are up. There seems to be a lot of diminishing there. So, people are looking to take a bit more control over their retirement, and property appears to be a very good way of doing that. It gives you solid returns. You've got bricks and mortar, which you can rely upon. You can keep an eye on that. It gives people, as I said, more control over their retirement. So I think a lot of the resurgence in SMSF lending has come as a result of that. I think also there appears to be a lot more education around SMSF as well. People are a lot more versed in what an SMSF portfolio looks like and how to manage that, and how easy it actually is to get one going. Very interestingly, there was around about 8,000 new SMSF applications last year, according to the ATO. Last quarter, according to the ATO, which shows that people are biting the bullet and taking responsibility for their own retirement, as opposed to letting it sit with some fund manager who, they've got their own numbers to hit, right? So.
Yeah, and I think you've touched on an interesting point that is broader than SMSF. my perception has been, particularly since COVID and also correlating with the rate rises, concurrent rate rises, people aren't in that classic set and forget mentality. There's obviously record high refinancing and so on and so forth. And it feels that it might be a sort of a natural psychological shift to then consider your SMSF. So rather than have it be a set and forget piece, my observation is that people really agnostically are looking at more like all aspects of their life, and particularly where their funds are. And I think that the byproduct of that has been a bit of a wake-up call that even if you are a younger SMSF owner, is this actually generating the return? And particularly with the volatility of global markets, as well as, the stock markets in Australia, it doesn't surprise me that SMSFs are on the rise in a broad demographic for that reason. And I agree, coming from that place of certainty, but also coming from that place of self-control, where previously perhaps, borrowers or investors weren't as proactive as the current market conditions now present.
Yeah, look, I mean, it's if we deal with a lot of self-employed borrowers, they make up the majority of what we do. Something that you see with self-employed is that they're in control of their whole finances. They want to be in control of their earning potential, and having an SMSF as a self-employed borrower just makes a lot of sense. It's purchase your own commercial property and rent it back to yourself through the SMSF and obviously, without giving anyone financial advice here, it is a fantastic strategy to remain in control of your finances.
Yeah, indeed. Well, in terms of then just maybe using that as a good segue to talk about the types of borrowers who are interested in SMSF investment. Why do you think that SMSF investing has benefited retirees opposed to traditional superannuation investment channels? And I might just give you a double barrel. Equally, as we're talking about, SMSFs are on the radar of younger investors. So why do you think, or what benefit do you see in addition to what you've said, and why do you think that that's also expanding?
Yeah, look, I mean, if it was me and, I was a younger self-employed applicant, instead of paying rent to someone else for your commercial premises, for example, my strategy would be to purchase that property and rent it to myself for a yield that I control. It allows you to put X amount or Y amount of dollars into your retirement, so to speak, through the SMSF model. You're also getting capital gains on the property itself. Obviously, you can see that capital gains through getting a valuation report conducted every sort of 5 to 10 years. And if you've got borrowings against that property, a valuation report is probably required from the lender either way. So you can see what you've paid for it, you can see what it's worth now, you can see how much you've contributed. And again, that transparency is really attractive, especially for people in their 30s and 40s, for example, who can amortize that facility over a 20 to 30 year period and have an unencumbered asset to sell when retirement comes upon them. Plus, they've obviously gained through the taxation advantages of that structure. So that's the way that I would see it from a positive perspective, having control of that retirement plan.
And I think that you raise a really interesting point. For me, SMSF is synonymous with retirees. So looking at that really, that bricks and mortar, feeling confident in that asset, it being a very traditional asset to invest in, and so on and so forth. But I think you raise a really interesting point that with the savviness of business owners now and the financial literacy that a lot of business owners are now having as a consequence of refinance, being aware of different finance facilities, the growth of commercial finance as a whole through the broking channel itself, it seemed like a natural, as we were talking before, a natural extension to look at how can we work this? And I think particularly this is where the opportunity is for brokers and accountants to work together with SMSF borrowers, because to your point, I would expect that a lot of small businesses wouldn't even connect the dots that, you know, you could do this as an investment channel that has immediate positive tax implications and so on and so forth. So I guess the other sort of takeout that I'd really encourage brokers who are listening today is to, if you are interested in the SMSF space, to very much do that in conjunction with accountants. The other thing I'd also say is, as Matt alluded to, SMSF lending is very multidimensional, is difficult, but the thing that I like about it is it's very black and white. It either complies or it doesn't. And in terms of the SIS Act, etc., it's extremely specific. So I started to notice brokers really specializing in SMSF. So I think another takeout of today is, if this is not something that you choose to invest in upskilling specifically, but to make sure you're partnering and you're finding an aligned broker to collaborate with, because this is just such an upsurge in terms of sector growth.
Yeah, absolutely. I've got a friend who works in an accounting firm, and they've put on someone to do SMSF just all day, every day, just set up new SMSFs, which tells me two things. Firstly, the resurgence in the area is certainly tangible. It's certainly there. But it also tells me what you've just said, that you need to be partnered with the right people who know what they're doing, and they can navigate the regulations and compliance. The lending part of it, from a lender's perspective, is very easy. Lending is lending. You know, if it makes sense and the deal services and it's an asset that can be used, then absolutely. But the SIS rules and all the rest of it, yeah, you do really need a financial planner and a good accountant to partner with you when considering these sorts of things.
Yeah, absolutely. And I guess there's the setup side of things, but then there's the auditing side of things. So for those of you who aren't aware, if you have an SMSF, you have to have a very specific audit and very inflexible audit structure each year. And how that SMS is set up to start with, the funding, the propriety, et cetera, is really critical to make sure that you then don't get into audit issues as well. So on that note, it's not easy sailing. As you say, from a lending perspective, money is money and credit criteria is credit criteria. What are some of the areas that need to be considered for writing SMSF loans?
Yeah, traditionally, SMSF lending will ordinarily, and I can't speak for all lenders, but ordinarily be a full doc exercise, which will involve tax returns and financials of the applicants. As I said, I don't speak for all lenders. I don't know every lender's policy inside and out, so I might be wrong, but ordinarily is a full documentation exercise. That's simply to understand where the cash flow to service the debt is coming from. There will be income from the fund if it's an existing fund, for example. There could potentially be income from outside of the fund, outside of that rental income. Again, you have to be careful in respect of how much you can actually contribute into your SMSF every year. Again, I'm not an accountant, so I can't give any advice on that, but there are certain limitations as to how much you can contribute into the fund, which is why I believe most lenders go down the full documentation path to make sure that all of those I's are dotted and T's are crossed. There's also minimum liquidity hurdles to consider as well, which is Aquamore, for example, we don't have a minimum liquidity hurdle. Again, not sure about other lenders, but some of them may have a minimum 250 or 500k assets in the fund required in order to be eligible for SMSF lending under their policy. I think a lot of that is to do with demonstrated ability to fund your SMSF, and it also gives the lender a bit more comfort, given the fact that SMSF lending is non-recourse. So as a broker, you might need to keep an eye on those things. You might need to be aware of those minimum liquidity hurdles. You might also need to be prepared for a lower than expected LVR position, for example. Again, that's based on the non-recourse nature of traditional SMSF lending.
Okay, great. Well, we've got a tiny little bit of time, so I will go to a question that's come in, which is, do you offer land and construction finance, in brackets, house and land package, for NDIS residential properties?
Um,
Finance would be for either a company, trust, SMSF, or individual applicants.
Sticking to the topic of the webinar, SMSF, we wouldn't fund house and land construction. I don't believe that fits under the required SMSF lending rules. If it's a non-income generating asset when you purchase it, again, I don't think that's eligible for SMSF lending. We wouldn't fund land, for example, and construction. Yeah, I think that falls outside the box, unfortunately. So
Yeah. And another question's come in, is whether a borrower can pay off the loan earlier under an SMSF structure.
yes, they can amortize the debt to their free will. Absolutely, they can repay that. They can repay that asset before the loan term expires. Certainly, from our lending perspective, there's no break fees. So yeah, absolutely.
Okay, great. I love all these questions that are coming through. I've had another one come in. What's the maximum LVR if somebody would like to buy an office?
That's all case by case dependent. That would be obviously location of the asset, yield of the return, obviously how much deposit they've got, what their servicing position looks like. All case by case. Feel free to submit an inquiry through to us, and we'll happily have a look for you.
Okay, great. And I think the answer to this is going to be no, but do you do off the plan residential properties?
We under SMSF, we haven't really had much of that. Under ordinary lending criteria, yes, we certainly would. For an SMSF transaction, I would need to get back to you to understand the transaction. But again, submit it through to us, and we'd be happy to let you know.
Okay, great. And I think that's sort of, that's case in point, that not any one situation is going to be cookie cutter. And particularly with the SMSF space, it is all very situational. So I would encourage you just to pick up the phone to Matt or the team and just run a scenario by them. I have had a request to send through a checklist about the policy and compliance requirements for SMSF. So we'll make sure we put that together and shoot that out to attendees just to help steer you. We've got time for just a few more quick questions. What difference does it make when clients are buying a unit trust or another SMSF as a unit holder?
Yeah, I'm not really sure of the question in respect of
actually, you know what? That just from my work in the SMSF space, that's actually an accountant question in terms of how the trustee of the SMSF, because how an investment property is purchased through an SMSF and the holding title of that is really critical. So an accountant would be able to answer that. Okay, we'll just fly to one last question. And it's around interest. And again, Liani, I would suggest that you touch base with Matt specifically about that and the team. Does the beneficiary need to be actively contributing to the SMSF?
I mean, not ordinarily. There could be more than one beneficiary. The rental yield, depending on the property, could more than service the transaction in itself. So contributions may or may not be required. There's no specific policy on our end that requires the beneficiary to be making contributions to the fund. Our loans are, to an extent, set and forget, so there's no way that we would be following up as a condition subsequent, for example, to say the beneficiary hasn't made X amount of contributions to the fund. That's not really our concern. Our concern would be that the debt is being serviced in a timely manner and their interest obligations are being met, for example. So the short answer would be no.
Okay, great. Well, thank you so much for everyone who's tuned in, and thank you so much for such great questions. We have gone a little over time, so we will wrap now, but thank you, Matt, as always.
Thank
and
you.
we'll look forward to seeing you next time.
Thanks, guys. See ya.
Bye.